This week on Money Unleashed, we'll be talking about pulling out of the stock market. Panic about this current market could ruin your long-term investment plan. Investors are worried about the stock market, and they're trying to figure out how to weather this storm. The S&P 500 is down so far this year, and more volatility ahead seems likely. Now, the obvious reaction is to sell stocks to then prevent further losses, but that might not be the most wise decision. Now, the Federal Reserve took an aggressive stance in tapering its timeline in recent months. Now, historically, stocks have struggled when the central banks decided to pull back on monetary stimulus. Higher rates then reduce investors' risk appetites, and economic activity tends to then slow down with higher costs of capital. Now, stock valuations aren't helping the situation either. Right now, equity prices are high relative to their sales, earnings, cash flows, and dividends. Now, this isn't the case for every stock, but so for the general part of the market. Now, that's especially true for indexing funds. Major indexes are currently dominated by large cap tech stocks and have higher valuation ratios than companies from other sectors. Now, expensive valuations then assume high growth, and it then creates more risk to investors. If growth then falls short of expectations, a correction is then almost certain. Most investors shouldn't be selling their stocks right now, despite these risks. Volatility and cycles are natural characteristics to the stock market. Investing in equities is a great way to help build wealth over a long period of time as these businesses grow. Now, to achieve those gains, however, you have to deal with the short-term consequences as it relates to supply and demand. You can't reasonably expect to enjoy all of the good times of the market without enduring a few of the bad times along the way. Now, it's a bad idea to panic and quit the stock market right now. However, it's a great idea to make sure that your portfolio allocation reflects your risk tolerance. The market will probably remain to be volatile this year, and investors with shorter horizons, well, they need to make sure they're at the right balance of asset classes. Thank you for joining us here at Money Unleashed as we go through educational topics and all the great things here at Hoffman Financial Group.